extraordinary music.
What's going on, Masterclass family? This is your boy, Mr. Adams, bringing you the Masterclass Black Friday trades of the day. I got quite a few trades to go over, so I'll try to make this video as quick, yet as efficient and as effective as possible. The trades that we're going to highlight today are Goldman Sachs, Microsoft, and Alcoa. And the reason I want to bring these three trades to our attention is because they all pretty much had the same exact setup for trading puts with the gold married system for puts. And it's not something that we come across pretty often, but when we do, it's something that can really work very well for trading to the downside. Now, we know that overall within the last month, the markets have failed, in October. Then we had this huge, somewhat recovery bounce in anticipation of a favorable outcome with the elections and then with the Federal Reserve, and now that we got a lot of the catalysts out of the way, the market is kind of tiptoeing slowly about trying to determine exactly which direction they want to go. In my opinion, I think it's going to come down and test some support level first to sort of strengthen a little bit before going higher. Because right now, the last move that we've had, a lot of people are considering it to be overbought. So expect a little bit more selling, the market to find a new foundation before going higher. Anyways, let's get to the topic of the day: the gold married put setup for Goldman Sachs, Microsoft, and AA. Starting off with Goldman Sachs, here is the 5-minute chart of Goldman Sachs. And as usual, the first thing that we look for, previous day's consolidation, which we had here yesterday on what was Thursday. Now, coming into Friday, we see the gold married levels for pivot support and previous day's low. A lot of time we're looking at gold married for previous day's high and pivot point resistance. Now we're focusing on previous day's low and a pivot point support. Along with that, we want to see all of the moving averages tightly together and they are above the price being the candlesticks, and the candlesticks dropping below all of those levels. And that's exactly what's happened here with Goldman Sachs. You got a candlestick, the very first candlestick that closed below the previous day's support. The previous day's low, the pivot point support, and 5 moving averages plus VWAP. This candlestick closed below the 200 moving average, the 100, the 50, the 20, and the 10 on a 5-minute chart, plus the daily VWAP. That's about 7 or 8 different levels of support. Looking at the MACD was below the zero line and negative coming into it. You had dual money flow for a very brief moment of time, then that quickly flipped negative, and the stock just went on to fall. Okay, now I'm going to pull up Microsoft. Microsoft, we have a similar situation on a 5-minute chart, and then we'll take the daily and hourly to see why this worked. So Microsoft yesterday, we had previous day's consolidation. Okay, now Microsoft is a little bit different because the stock is technically in an uptrend, and we want to trade in the direction of the trend. However, Microsoft was a bit extended on a daily chart, which gave you a reasonable opportunity to buy puts in this situation, so that it comes back down to reality. Nevertheless, as you can see, we have gold married puts. We have pivot support and previous day's low jointly together here. The second candlestick, which would be at 9:35, closed below all of those levels, including all of the moving averages that are tightly together, thus giving you, once again, 6 to 7 different levels of new resistance. And when stock broke down, it went back to test, couldn't break through, and just immediately flushed. There was no money flow supporting any type of up movement here. Plus, the MACDs were was negative as well, and the slow RSI went on to just sell off. So it was an easy trade. Last one that we'll look at to show you the consistency with what to look on would be AA. When I put out Microsoft and AA in a chat room, I did see Goldman Sachs, but I didn't analyze it, and it was actually the bigger move. I believe Goldman Sachs was like a 23-1. So I wish I would have taken time to look at that, but I did catch Microsoft and AA. All right. So you got somewhat of a consolidation on AA. It didn't form a doji on a daily chart. It had more of an inverted hammer, which is actually better, and I'll explain why shortly. But coming into the day on the 5-minute chart, you have the candlesticks in a pre-market opening up underneath all of the moving averages. You do have the married pivot support and previous day's low. And when it closed below that level on the third candle, it couldn't break back above it. Money flow turned negative. MACD was already negative. So all of these had given you signs that it was going lower. Plus, the market as a whole looked weak. So these are three examples of gold married for puts, and it's solely when you have the previous day's low and a pivot support tightly joined together with all of the moving averages above it, and price cannot break above or back above all of those new levels of resistance. Now let's quickly take a look at some of these charts on the daily so we can see what gave it away. I'm going to start by going back to Microsoft. I mean, not Microsoft, Goldman Sachs. So what made Goldman Sachs work, if we look here on the daily chart, let me just blow it up really quick. So on the daily chart, Goldman Sachs has increased steadily for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So Goldman Sachs have pretty much increased for 10 days in a row on that rebound. That's a tad bit extreme. So it was due for some profit taking. And what do we have here? The day before, on Thursday, you had an inverted hammer with an inverted hammer right up into the 200-day moving average on the daily chart, which is resistance, right? So that's a sign of rejection there. And anytime you see the inverted hammer, you can just draw a horizontal line at the bottom of, so if the stock breaks back below that, you know that it's time to enter. And just looking at this a tad bit further, we'll see some confluence here. I've been talking a lot about confluence. So if I draw a horizontal line, I look back, I can see that this area here, this swing, small swing, was a rejection point for Goldman Sachs. So if I draw a trend line there, and let me extend this to the left, I can see that, okay, this has become resistance here. We not too long ago we had a descending triangle, which is a trend line that I'll bring to our attention as well. But focusing on this swing point here, you see how the stock fell, came back up, it couldn't get anywhere near it, fell again, it tested that this resistance here, couldn't break through, tested again for a third time, failed to break through, and couldn't break through on the inverted hammer. So this is showing that this is a strong level of resistance for Goldman Sachs. And if I were to extend the trend line here from this descending triangle, you can tell that, this wouldn't be necessarily an ideal example for the confluence that I'm speaking of using this trend line. So what I'll do is I'll draw my own from this swing high here to the inverted. So if I connect those two lines, this swing high and a swing high from the inverted, that gives me a trend line resistance as well that's in confluence with the 200-day moving average, plus the resistance, the horizontal resistance, which is 3 levels of confluence for resistance, which is giving you an indication that it's likely going to fall after running up for 10 days. That makes a bit more sense to me. If we look at the 1-hour chart on Goldman Sachs, What caught my attention is that yesterday, after the market closed on Thursday, the MACD had already turned negative, right, on a 1 hour chart. That was the big sign. And then when we came into Friday morning at 9 o'clock, we can see that this candlestick had also rejected that same horizontal resistance that we saw on the daily chart, had closed below a 10 and a 20 that had already started pointing down negative and began to fall below the cloud. And so this gave me every indication that the stock was likely to fall. I believe it was the same thing on the, let's see, the 30-minute chart. Here's the 30-minute chart. If we take a look at the pre-market, the moving averages are already pointing down sharply, and the MACD on the 30-minute chart before the market had even opened. If we take a look at the 5-minute chart, we can see here, this is just pure price action, that this was a level right here for Goldman Sachs, 227.13ish, right in this area. This was support, one test, two tests, three tests, four tests. So it had held on at four different like on four at it had held four different occasions in the past. And so now let's look at it on Friday. We immediately get a flush, we get a breakthrough that, and right here is the retest. So anytime you get a flush through support, always expect a quick retest. And if you buy that retest, that's when the huge flush is going to come and give you amazing opportunities. It's my absolute best strategy for buying puts. If we look at the VWAP, this is a weekly VWAP, I believe. Here, we can see how the candle in right at 9:30 broke through VWAP, came through, tested VWAP the same way. One test, two tests failed, broke through, then broke through the second level of support. So that's actually two decent trades that you could have gotten off of Goldman Sachs. Now, if you want, you can draw somewhat of a trend line too to show some confluence. If we were to draw a trend line, I'm not going to make it exactly perfect, but I think you get the point. If we draw a trend line, we can see here that here, this trend line lined up for confluence right here with VWAP, so that's a failure. Then here, this trend line came to a confluence zone as well with this 227 level for the stock to fall, right? So that you can always use confluence on a 5-minute or 15-minute time frame to give you a better entry, so you can be able to catch those pops and those flushes. And if we take a look at Goldman Sachs options chain, 1 second, we see that the 227.50s went from 14 cents to $3.35. That's 23 to 1. That's a huge trade. And it was given away by the inverted hammer on the daily chart. This inverted hammer right into three levels of resistance. Okay. Let's quickly take a look at Microsoft. So on Microsoft, as we said, the stock is on the uptrend. It bounced off of the 200-day moving averages. The MACD has turned positive. We got somewhat of a Thanos setup taking place here. So it's definitely a good trade to watch in the near future for a move higher, maybe to retest 116. But this doji here on Thursday is what caught my attention when the market appeared to be weak. This doji is here pretty much sitting in mid-air. It's above all of the moving averages. And you never want to go long when the stock is above the moving averages. You want to wait for it to be touching to get a better entry. And so I said to myself, if it can't hold this doji, it's likely going to come back and test all of these moving averages of 109. And that's exactly what it did. If we're looking at the 1 hour chart, we can see that the MACD turned negative on Thursday at 4 o'clock. And the 10 had crossed below the 20 on a 1 hour early on in the, early on in the day on Thursday. So the momentum had already completely shifted. So coming into Friday, the bias was already to the downside. All right. Let's see here. Just to give us some technical analysis on price action for Microsoft on a 5-minute time frame, we can see that this level of 110.90 was support. It broke through it, tested one, test two, test three, several tests right here early in the morning. It couldn't hold. Broke through that level, came up, retest that same resistance level, same support level as new resistance, and failed and crashed right on down to 109 exactly, where all of those moving averages were, which means that's where you're going to have some buyers. And if you want to look at it from a perspective of confluence, you can sort of draw a trend line down through here to test these two highs. 1, 2, that's your two swing highs that you can connect this trend line on a 5-minute chart, which gives you confluence with this horizontal resistance. So there's two levels of confluence right into the open on Friday, and there goes your flush, right? Plus you got the confluence of the MACD, so that's three, and all of the moving averages that's there at the same point in time. So we got 5 to 6 different confluence levels or confluence zone right here at 9:30 for Microsoft to flush. And let's take a look at the last one. Well, before we go there, let me just take a look at the options chain. All right, so Microsoft, the 110 puts open up at 20 cents and went as high as 122. That's about a 6-to-1. And last but not least, we're going to look at Alcoa. I have the options chain up already. We'll just take a look at the move that it had. Well, it already changed on me as far as the time, but I can tell you that the 35 puts for this week's contracts opened up at 20 cents and they went as high as 105 for a 5-to-1. So let's take a look at the Alcoa chart. What caught my attention on Alcoa was the fact that you had another inverted hammer right here. Let me remove the line so we can just clearly see it. All right, so Alcoa had been up for 1, 2, 3, 4, okay, you could say 6 or 7 days. And then it formed this inverted hammer, which is right at the VWAP, the 10 and the 20, which is beginning to point down on the daily chart, which means that the stock is still technically in the downtrend. Plus, you got all of the other moving averages on top of it as a heavyweight. If we draw a trend line from this swing point here on down, we can see that the stock is testing back up at the trend line resistance. And if we draw a horizontal level here off of this swing, we can see that this used to be support, right? So it broke through it here, gapped above it, tested one as support, came through, broke through that level. Now it's testing it as resistance 1, testing it as resistance 2, right? Here's your second test of resistance, of new resistance. And it's with an inverted hammer, which is a reversal candlestick at a resistance level, which is a telltale sign that it's likely going lower. So you got a rejection of like 3 indicators, which is the 10, 20, and VWAP, monthly VWAP on a daily chart. You're in trend line resistance, and you got horizontal resistance on a daily chart. So I can say, okay, if it breaks below yesterday's previous low, then the stock is going to crash. And that's exactly what happened. On the hourly chart, once again, Thursday we saw how the 10 moving average crossed back below the 20. The 1 hour MACD was already negative, so you already had a bias. On Friday morning, the stock had opened up beneath the Ichimoku cloud, letting you know that this stock is going lower. It was pretty much a no-brainer of a situation. If we take a look at the price action for it, you can see the level had carried over to where this was a support level. Rejection, 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 broke above it, held as support, went higher, Rejected off of that resistance. But here's the level from yesterday. Came back down, tested as support, broke through again. Had a quick test one more time to see if it can get back above this resistance level to test its new support. Failed to do so, and it just collapsed. If you want, you could, even draw a trend line through here. And this level here was another form of extra confluence for your rejection. The MACD was negative as well, and this is on the 5-minute negative chart. All right, so we had two inverted hammers on a daily chart that was in confluence resistance, and we had a doji that was extended from the moving averages on a daily chart. The MACD on the hourly was negative on all three time frames, where we had the 10 crossing back below the 20 the night before the market opened, giving us a negative bias that the stocks were going to fall. And we could easily see that we had the go married for put setups on every one of these trades, which made it easy to short. So those are your Masterclass Black Friday trades of the day. Masterclass, dominate.